take the fourth major benefit that I see as being a massive benefit for veterans and put it into two things. One is very competitive, low monthly interest rate, and two is being able to offset or curb your closing costs. Because even though there's no down payment, every loan, I don't care where you're doing your loan at, has some type of prepaids or closing costs. But the good thing about the VA home loan is they have you covered as a veteran. So what I mean by that, in Florida, you're on an average of about 2.5 to 3% of the purchase price for your total closing cost and prepaids. So let's say you buy a home for $300,000. You do the appraisal. So on a typical home loan, you have to pay the closing costs and prepaids. There's no way around it. Somebody's got to pay them, whether it's you, the seller, the realtor, grandma, whoever, you got to pay them. But on a VA home loan, you can actually use the current equity out of the purchase to pay your prepaids and closing costs. And I know that sounds a little bit confusing. So if you want to dive more in that and get more details on how that your VA home loan could not only not charge you a down payment, but pay your closing costs, call me, Joe Miller, local mortgage expert, 941-236 6649. That's 941-236-6649. I'd love to answer you more questions about that. But curbing your closing cost and not having to pay those. So let's say you buy a home. I was getting an example for $300,000. 300,000, but you do the appraisal and the appraisal comes back at $310,000. Well, guess what? The VA will let you finance up to 100% of what your house is worth. And you can use that extra. So you paid 3, it appraised for 310, you actually got $10,000 worth of equity. The VA loan will allow you to keep the money back in your pocket and use that $10,000 extra in equity to offset and pay your closing costs and prepaids. We call it curbing your closing costs. Or if it appraises for 315, you can use that 15,000 to pay off your closing costs and prepaids, which is a huge benefit. Now with rates, adding back to the fourth benefit, VA does not, I call it, tax you for having lower credit or having credit challenges or having a newer, lesser established credit history. The VA is not going to hit you too hard on that. They're still going to give you a 30-year or 15-year competitive fixed rate that gives you a huge incentive. They actually insure the banks and back the banks up to make sure they give you a competitive promotional rate for being a veteran, which is different than any other program out there. Nobody else does that. It's the main benefit, especially that our company provides for veterans, Pathway Mortgage. We are always making sure they get the lowest rate, whether they have a 620 or an 820. So that is a great perk. You can curb your closing costs with your equity in your home off of your appraisal, and you get a low competitive rate even if you have some credit history issues.